Governments are rushing to ban innovation in banking, and it's a real threat. Now, technology has upgraded and improved almost every area of our lives today, but the biggest and the most influential area that affects each and every one of our lives has resisted any upgrade or change, and that is, of course, the banking and the finance sector. Now, rapid advances in technology are a direct threat to their monopolies over money, which is why, of course, state and federal regulators and some members of Congress are sounding the alarms on the entry of cryptocurrencies into banking. Now, in recent months, we've seen top officials from the Federal Reserve and other banking regulators have urgently begun what they are calling a, quote, crypto sprint to try to catch up with the rapid changes and figure out how to curb and even stop them from disrupting the old models. So in this video, I'm gonna break down the battle that's being waged right now, what the regulators and bankers are actually saying, what their words are from their mouth, what their angles and their attack vectors are, what we need to be watching and paying attention to, and how this eventually all shakes out. So let's go. All right, now we're jumping in real quick. If you're new to the channel, my name is Mark Moss, and we're talking about how the oldest business model in the world is being disrupted, and it's a battle. They're trying to protect it, and it's being disrupted now. When we have something like this type of a battle, this type of innovation, it creates massive opportunities. If you're paying attention, if you're caught off guard, it could be bad. That's why I'm having a 1-hour event where I'm gonna dig deep into this innovation, what's happening, and more importantly, of course, where the opportunities are gonna be. If you'd like to join the live event, it's free. There's a link down below. Come hang out with me. We're gonna dig deep into this, and of course, I'll go live question and answer. All right, now let's go ahead and just jump through this material. I'm gonna go through it pretty quickly so I can show you some of the stuff they're actually saying, their quotes. So of course, we're just gonna start at the top with something called creative destruction. Now, you might have heard this term before, but basically it's that innovation, something new, the creation, destroys the old way, right? Of course, you understand that it's kind of like seasons, like winter kills all the old growth off, and it must die. We have to get rid of that growth so that we can have spring, we can have new growth. We can't have the change, like everybody wants everything to be okay, but like we grow through stress, right? We have to have the destruction to get the growth. And when we talk about it in terms of markets, which of course, you know, my company is called Market Disruptors. We talk about disrupting markets. We need to enable not profitable resources. So the companies that are zombies, that aren't producing anything good, that aren't using capital wisely, they're in heavy debt. We need to get rid of those non-profitable companies, and we need that to flow into new companies that can be more productive, right? More profitable. And the other thing to keep in mind is that when it comes to creative destruction, as much as the old model is gonna try to resist becoming obsolete, they'll use every tool in their shed, including government intervention, government regulations. When there's 1,000% improvement, it's just unstoppable. There's no way to stop something that is that good. Now, I want to bring you to something just to show you how long this has been raging on. This is from Frederic Bastiat. This was written in 1800s. If you don't know who he is, you definitely should. As a matter of fact, everyone should have read this book by now. It's called The Law. It's a very small booklet. Just get it off Amazon and read it. He's an economist from France, like I said, from the 1800s. I'm gonna put a link to the Amazon in the description down below. You should read this book. It's a booklet. You can read in a couple hours. Anyway, in the 1800s, he talked about, this is kind of tongue-in-cheek, this was way before electricity, but the petition of the candle makers. And so this kind of frames up what a government regulator's mindset is. So he says that the petition from the manufacturers of candles, which is wax lights, lamps, chandeliers, reflectors, snuffers, extinguishers, etc. Generally everything used for lights. We come now to offer you an admirable opportunity. So the candle makers are coming. Here's an opportunity. We are subjected to the intolerable competition of a foreign rival. The candle makers are under attack from a foreign rival who enjoys, it would seem, such superior facilities for the production of light, that he is enabled to inundate our national market at so exceedingly reduced price. So the candle makers are under attack by a new technology that can inundate them at a much more competitive price. This rival, who is no other than the sun. The sun is the direct rival to the candle maker, and it carries on so bitter a war against us. So our petition is, the candle makers are going to the government, our petition is shutting up of all the windows and doors, skylights, shutters, to pass a law So they're asking them to pass a law to shutter up all the windows, doors, skylights, shutters, and curtains. Don't go outside. Stay inside. Close your windows. Make sense? In a word, all openings, holes, chinks, and fissures through which the light of the sun is used to penetrate into our dwellings. So this is kind of tongue-in-cheek. Like I said, this is before electricity, but they were talking about how the candle makers are under attack by the sun. And so they should pass a law to say that you have to shut all your windows and doors so the sun can't get in, so you'd have to use more candles. Make sense? So this has been going on for a long time. I thought that's why I'd share that with you. Get his book. I'm going to link to it down below. But the thing is with the technology is it improves every area of our life. We have technological revolutions. They change the way of life. So these are some of the big ones. So of course electricity came and it kind of got rid of candles. The sun was doing it before. We had horses and buggies, and that was good for all of humanity. People walked or rode horses, and then we had cars. It was so much better. It replaced them. And each one of these, the candle makers resisted electricity. The horse and buggy makers resisted cars. Cars were dangerous. Cars were noisy. We didn't need them. The internet did it to magazines. Magazines have not had a good life since the internet came out. Film cameras went to digital cameras. Again, it was 1,000% better. Companies that have been around for hundreds of years, like Kodak, gone. Rental movies used to go to Blockbuster, and now you just stream movies. And so what is next for money? That's what we're going to take a look at. Now, the one thing that you have to understand first about the money is something here called the Cantillon Effect. I've talked about it many times. Basically, it's summed up to say that whoever's closest to the money supply benefits the most. So when you have, the internet replacing magazines, I mean, the magazines were incumbent companies. They had some power, not enough to stop the internet. Same with Kodak, was a big old company. They had a lot of power, but they weren't strong enough to withstand digital cameras. Candle makers, buggy makers, we can go on. But now there's a new battle. Now we're talking about the money. And the money printer wields massive power because of the Cantillon effect. So what happens is most people think there's like this trickle-down effect, Reaganomics. If we pump enough money into the rich guys, it will then trickle down to everybody else. The reality is it all gets siphoned off over here to the cronies, whoever are close to the money supply. A perfect example is Wall Street is becoming the landlord. They're buying all the single family homes up across the nation, paying 35% over value, stealing the wealth from everybody else. And how? Well, it's because they're getting basically free money from the Fed, from the money printer. From here, you and I aren't getting it. And it's been going on since the goldsmith days. The bankers want the control of the money, so they're okay seeing the buggy makers, the candle makers, the magazine makers go out of business, but don't come after the money. Now we can see this. This is what kind of started this all. This is the New York Times. Officials worry as crypto boom invades banking. Oh no, not banking. We can have technology disrupt every area of life but banking. Now, starting with the top, we have Christine Lagarde. She's previously the head of the IMF. We talk about the IMF a lot, the central bank above all the central banks. And now she's with the ECB, the European Central Bank. She's an insider. She's someone who's making the rules. Now, she's been talking about this for a while. She said, quote, "Innovation threatens financial stability." That's in her own words. Innovation threatens stability. Well, yeah, because creative destruction. It creates something new and it gets rid of the old. That's exactly what it does. But really, that's not what they're afraid of. What they're really afraid of is that it threatens their monopoly. That's what she's really talking about. Just like the candle makers were worried about their monopoly on light to the sun or to electricity, they're really worried about their monopoly. Now, a little bit about her, I want to show you. This is her quote. "If it's widely adopted, heaven forbid, they could threaten the financial stability and, of course, monetary sovereignty." So that's where she's really showing her true colors, right? Not just the stability that she's worried about. She's not worried about you and I. What she's worried about is the monetary sovereignty. Now, a little bit about Christine Lagarde. When she was the IMF chief, she was convicted. She was convicted of improper payments. She's a criminal. Did she serve time? No. Did she keep her job? Yeah. As a matter of fact, she got promoted to the ECB. That's the type of people that are trying to protect their monopoly. Now, in the United States, we're also seeing this. The US regulators are now, of course, trying to protect us. We're not smart enough to make up our own decisions. They have to protect us. So we have Senator Elizabeth Warren. She's great. She said that one option we could have is that we could just ban US banks. That's what we could do to stop it. She said that also that the creation of a government-issued digital dollar, that should get rid of it, because people wouldn't need that stuff if we just had a digital dollar, apparently. And then the new head of SEC, Gary Gensler, he says that we need additional authorities, we need more manpower, we need more resources to protect investors. So let's take a look at some of these things they're actually saying here. So we can see here, right, we'll start with this one. So we see that traditional consumer-oriented banks are being invaded by people like BlockFi, people like Kraken, and now as of yesterday, Coinbase, they're coming under attack as well. And because they work without having traditional federal deposit insurance, FDIC. Now, that's a big risk for you and I because we're not smart enough to figure that out. Now, the money in the banks have FDIC, but of course we know that the money in our hedge funds, our 401ks, the money in the stock market, that's not FDIC insured. If we lose that money, we lose that money, right? But what they're saying is that these traditional models, the BlockFis, the Krakens, the Coinbases, the Geminis, they don't offer FDIC insurance because it's more of an investment. You and I know that. We're smart enough, but apparently they don't think that. They're afraid of a more radical end as decentralized finance. Of course, they're worried about that, which they say operates outside the regulatory system, heaven forbid. Because it's moving so fast, they're not able to keep up. DeFi eliminates human intermediaries like brokers, banks, clerks, and traders. So it eliminates all those intermediaries, the brokers, banks, clerks, and traders, which is why it's faster, which is why we can make so much more money. All these people are what we call rent seekers. They sit in the middle trying to extract little bits of capital. It slows the system down. It makes it harder to use, but more importantly, it sucks all the money out, which is why in your typical checking account, you get 0.006% interest. You basically get zero, all right? And so instead we use algorithms, technology, innovation to execute financial transactions such as lending and borrowing. Well, that sounds pretty good to me. Like, shoot, let's get rid of the intermediaries. Let's use technology so we can save money and pass that money on to people like me. I like that. They said that, Gary Gensler says, we need additional authorities to prevent these transactions, to prevent them from falling between regulatory cracks. So we need to get more people to try to police this because it's moving too fast. And we need, of course, more resources to protect investors. Protect us. Remember, we're not smart enough to make our own decision. Now, of course, you can go buy as many lottery tickets as you want. The chance of you winning that is basically zero. Of course, you can go gamble as much as you want in Vegas. Sure, what are the odds in Vegas? They're stacked against you. But heaven forbid you be able to, decide to get your money out of the bank where it's making 0% and make 8%. They must protect you. Now, they said that the DeFi protocols on stablecoins are pegged to the United States dollar, but it's not guaranteed that their value is adequately backed. Well, most of the big stablecoin companies are now doing attestations and showing their valuations and showing that they are backed properly. So that's something that can easily be fixed. They say that it's ballooned to 117 billion from 3 billion since 2019. So it's gone from 3 billion to 117. That shows there's a product market fit. That shows there's a demand for this. You and I, consumers, we want this, obviously. Shouldn't the regulators just let it happen? They say that people are using them as bank deposits, right? But they're not insured by FDIC. We talked about that. But what I want to talk about here is Miss Warren, Senator Elizabeth Warren, said one option worth considering is to ban banks in the United States from holding cash deposits backing stablecoins. Let's just ban them. I mean, that's one way to stop innovation, right? Make it illegal for them to participate in it. That could effectively end the surging market. But the market is because the people want it. You and I want it. So they want to ban the banks to prevent the surging of the products. But the reason why the products are surging is because we need them and we want them. She also said that the creation of a government-issued digital ID could also end that. You wouldn't need stablecoins, she said. You wouldn't need cryptocurrencies if you had a digital US currency. You wouldn't need Bitcoin if we had a digital dollar. She's completely missing the point of why we need Bitcoin and decentralized currencies. I want to show you two more things here. Oh, she said crypto is the new shadow bank. She said, it provides many of the same services, but without the consumer protections. Remember, everything's for your safety, right? Everything's for your safety. You can't use these alternatives because you put everybody else at risk in the traditional financial system. It's for financial stability. She says, I love this quote right here. It's like spinning straw into gold. turning straw into gold? It's like that? You mean like printing $8 trillion in the last year? Something like that? Stablecoins don't do that. They take a dollar in, they produce a dollar stablecoin, they hold that dollar. At some point when you want to turn the stablecoin back in, you get the dollar back. They're not creating money from nothing like the Fed. They're not printing straw into gold like the Fed. Lawmakers and regulators are worried that consumers are not always fully aware. They're not fully aware. They got to protect us of the dangers. Crypto deposit accounts are not federally insured, and holdings may not be guaranteed if markets go haywire. Okay, we understand that. We understand that the money in our stock market accounts, etc., are not protected. And then we saw this came out today, I think, and this kind of tells you everything you need to know on Bloomberg. Crypto accounts yielding 7% spur scrutiny as they warn of risks. They pay 7%. Why do you think they're growing so fast? When you make 0% in your bank account, now when I was a kid, you could make 8 or 10% in your bank account pretty easy. As a matter of fact, I believe from 1960s to 2007, you could make about 7%. 7%. Today you make 0. If they continued to pay 7, nobody would be going to these. But of course they can't, because they can't stop printing money, which is why their business model is obsolete. Now, they're making a big mistake, right? They're making a big mistake. We need to continue to innovate. We need to continue to have progress. And really what the US regulators will be doing is just conceding US financial leadership to the rest of the world. Hey, let's stop Americans and American institutions from participating in innovation. But it doesn't stop the rest of the world. It just goes offshore. If the US really cares about their dominant position and they're playing the long game, not the short game, but their dominant position, they should embrace this technology. They should continue to be the innovation leaders like they were with the internet, Apple, Facebook, Netflix, Google, etc. And they should be able to maintain that, be able to control that. But instead, they'll just sacrifice innovation to protect the old world, and they'll push it offshore. And they harm the market participants. People like you and I, who are making 0% in our banks, will not be able to make a good yield anymore. So where does this go? Well, like I said, when we have this type of disruption, it creates massive opportunities if we play it right. But at the end of the day, if we really look out the long game, they cannot stop the revolution. When we have creative destruction, when the new way is 1,000% better, it's just too good. It can't be stopped. I've said over and over that solutions come to problems. The Fed created $8 trillion in the last 16 months. About 35% of the money supply was created in the last year. Our dollars lost 35% of the purchasing power, right? Homes went up 25%. Used cars went up 30%. Lumber went up 300%. Food's up, right? And so that's the problem. And we need a solution, and there is innovation happening in the banking industry. Like I said, the runaway money printing is a problem. Also the permissioned access. I don't know if you guys saw my El Salvador video. If you haven't, editor, go ahead and link it right here. But I went down and helped people in El Salvador who don't have permission to access the banking system. There's 2 billion adults in the world today that don't have permission to join the banking system, so we need that. Those are problems. There's no rates of return on savings. Like I said, the bank's taking your money, paying you 0%. Their average, I think, is 17% they make when you take, credit cards and things like that. So they're making 17, they're paying you 0. There's a 17% spread. Why shouldn't you be able to get 7%? That's a problem. It's also very slow and expensive. The innovation fixes all those things. It's a revolution. It cannot be stopped. And there's massive opportunities creating all over the marketplace that we can take advantage of, which is why I'm having the 1-hour live presentation next week. There's a link to it down below. But let me know what you think about the revolution. Do you think that they're out of their minds trying to stop this? I think it just kind of makes them look even more incompetent. It shows how desperate they are rather than embracing it. Maybe that's because I have an abundance mindset, not a scarcity mindset, but let me know what you think in the comments down below. Of course, as always, give me a thumbs up on this video if you like it, and if you don't like it, give me a thumbs down. But at least leave me a comment and let me know why. All right, that's what I got for you today. To your success. I'm out.